Hey, you have Patrick Findaro here, co-founder at Vetted Biz. Very excited to have on Brandon Moore. He's a former franchisee of Dental Fix, as well as an IT professional. And we've been trading notes going through the SBA loan data, especially for franchise loans, for well over a year now. And it's good just to sit down and talk to Brandon about his experience being a franchisee, as well as going through so much information on franchise loans and just what he's doing from a what he's doing to shape potential policy and enforcement on the franchising side. So very excited to have on Brandon today.
Thank you. Thank you. Appreciate it.
So Brandon, maybe we could just do a quick recap on how you got into the franchising space.
Well, so prior to starting the Dental Fix franchise, I had a business working with dental offices doing their IT equipment. I was close to the dental industry already, and I had a reputation for doing that. And because of what Dental Fix offered, it made sense for me to kind of bring the capabilities that they offered on board. So that's when I, quit my day job back in 2015 and went down the franchise venture.
And how did you so you were already kind of in this industry, then you saw an opportunity in franchising. Were you working with a consultant or broker? Did you just approach the franchisor directly?
Believe it or not, I was sitting down with my wife at the time because we were looking for something to get me out of, working for a corporate office. She herself had her own business. And so we were looking to break me out of that. And so, and there was a little bit of vertical integration there. She was a dentist as well. So it was very handy, having all of those capabilities in-house, so to speak.
That's well said.
And so there were draws to Dental Fix that played well with what I was looking to do with an IT company. And so it made sense.
And so Dental Fix, I believe the franchisor at the time was based in Florida, and you opened up a location in Virginia?
Correct. I was in the Northern Virginia area. Mm-hmm.
Okay. Could you tell us a little bit about that process, how it was opening and running a Dental Fix franchise?
Yeah, it was interesting. It was definitely the exhilaration of opening up a business and trying to get over that hump. Just unfortunately with Dental Fix, that hump is a lot larger than anticipated.
Yeah, well said. And yeah, I mean, how I see it, it's a time to open, break even, and then hit substantial income. And, some of those humps can take a long time. And some of those humps, sadly, many franchisees never reach to that significant income level.
Yep.
And what made you want to get out of the franchise system and move away from owning a franchise?
Well, I've always been of the mindset that with any business venture, you got 2 good years of sweat equity going into it, that if it's not paying by that time, you got to start looking at your exit strategy.
That's well said. Yeah, you put your head down for 2 years, you push full force, and if it's not working, you had 24 months that you were pivoting, working with the franchisor, or working with your business partner, and then from there you gotta pivot.
Yep. And that's about how it went for me. So I launched in September of 2015 and I officially terminated in October of 2017.
Okay. And then what happened after you terminated? How did you get down this rabbit hole of looking at franchise data?
So, so when I terminated, there was litigation involved, obviously, because the franchisor wanted to collect on 18 years of unpaid royalties. So there was a lawsuit about that. And so what sparked going down the rabbit hole was when I got sued, I didn't have money to pay for litigation. Typically after getting scammed for a couple of years.
This is what, your late 20s, early 30s?
Early 30s, right?
Yeah. You're beginning your career.
I mean, it's like, I don't have money to fight. $250,000. Come on. So fortunately, I, hooked up with really great attorneys and we worked out a deal, and we kind of made it a group effort. And so I wound up having to use my connections in the franchise world. We got almost 20 franchisees, and the going down the rabbit hole kind of happened organically because, every time we got to call somebody up, it's another person who is like kind of stuck in this space of not knowing what to do, that they've reached that 2-year sweat. They need an exit strategy, but so far the only exit strategies look financially brutal, so to speak.
And did most Dental Fix franchisees that you spoke to, did they get SBA financing, or were they most just investing their savings?
So there was a blend of how people structure their financing. Specifically with the dental fix loans, there was 54, 55 loans total that we're aware of. And there was, at one time they boasted having over 250 franchisees. So I would say maybe about 20% of them were funded through SBA. They also had some people that funded it through the IRA, the rollover, the ROBS program, whatever that is. And so there's some people that use both. Towards the end, I think that they tried to use crowdsource funding, but I don't know if anybody actually was successful in using that.
In our podcast and our video, we have a lot of prospective franchisees, current franchisees, and franchisors that dial in, hundreds, thousands from across the US. Like, what would be some lessons learned from the lens of a franchisee entering into a system to decide on investing in this, as well as just, relationships with the franchisor?
Okay. So I would avoid, if you're looking at SBA funding, I would go with a local bank. Don't go with a broker. If you go with a local bank, you're going to make sure that you benefit as a borrower from the underwriting process. And what I mean is, if it gets deemed too risky, they're going to come back and tell you, hey, this isn't a good idea, and you're not going to get the money, and you're not going to go down this rabbit hole and then have the SBA breathing down your neck. It's going to save a lot of time. Okay. The second one, if you do get an SBA loan, what I've noticed with franchisors, a lot of them have like opening equipment packages and things like that. Dig into that, because technically when you buy this equipment coming out of your SBA loan, it needs to be properly collateralized, which means that if you have to liquidate, that equipment you bought needs to be able to sell for what what it's collateralized for. So make sure that your franchisor is not taking, an unfair margin. We found a lot of overreach. We've seen a lot of overreach with that makes it difficult. So it's just, those are the two biggest lessons that I've seen when it comes to taking loans. Going with the local bank's the biggest, though. I can't stress enough how important that is.
I love that first point that you made. Like, ideally it's a local bank. Maybe you had a personal checking account with,
Yep.
personal credit facility with, there's some trust there, and they're your trusted advisor. Cause it's like, if I had the money to buy a house all cash, I wouldn't even want to do that, because I'd want a bank to go through and spot any issues with the house and properly underwrite it. Where if I'm not getting lending to buy a house, I that's a little too risky for me investing in. And it seems like a similar parallel would be for this case, investing in a franchise and getting SBA lending.
Well, I think the important thing is that, what I've noticed is that the brokers have gotten a little too cozy with the franchisors. And so when you go with a local bank, you're ensuring that relationship is arm's distance. You're never going to have a conflict of interest, because the bank likely has never worked with that franchisor before. There's not a big concentration of loans.
It could be quid pro quo. Like, if the franchisor is giving the broker candidates that don't already have a financing, and vice versa, you could be kind of in the crosshairs of a relationship that you're just a pawn in, I guess.
Exactly. And it looks that's what we experienced with dental fix, because the way that those loans got issued, they got issued for a period of just 2 years, and then they stopped. And there was no more. And so if you look at that, that's kind of interesting. What made at that 2-year period suddenly that loan is no longer something that a bank is interested in?
Wow.
You would think a good investment would be a good investment regardless of a 2-year time frame.
And then collecting information on like the financials and trying to forecast break even, actually making substantial income from the business. Did they have an item 19? Were they disclosing financial numbers?
No, in this case, no. In this case, no. And so these sorts of representations were sprinkled all throughout their marketing. And it wasn't, the big one was, you get 5 jobs a day, $175 an hour. They put out representations about total annual revenue for the whole system, which you could, extrapolate from. And that was the issue with that, is it was corroborated a lot by their discovery day process and the person that they had you meet with. And so that guy was the subject of the Virginia and Washington state orders, where they talk about, this guy that they were proffering up as a neutral organic franchisee is actually, an industry veteran. He's been doing this for a while. He's been working in that area, and the Washington State order is a great order because it's just like you read it and it just blows your mind. Like you would think that you would need to disclose this.
So they had a supposed franchisee that was validating everything the franchisor was saying in terms of financials and the road to profitability.
And so it was to the point, like with me, my experience was I emailed the franchisor for information. And of course, when I first talked to them, I'm like trying to get financials, and the sales agent was like, no, I can't talk about that, which is correct. She says, but then she emails me a list of people who can, and number one was this guy, right? And so that's public as part of my lawsuit. But yeah, so you go down.
Do you think all franchisors should have an N19 and they should all be disclosing the sales and the unit level economics of franchisees?
That's a tough debate. I would like to think yes. I mean, you don't see these sorts of issues with the established brands. Let's put it that way. And so maybe part of the answer to all of this is go out and establish your brand independently and then franchise.
Yeah, I'd like to see at least 5 corporately owned and operated locations for 5 years, and then you can go out, besides just friends and family.
Mm-hmm. And that's definitely something I would look at is what is have they profited from it, the owners, things like that. There's a lot of corporations out there that they don't have that history. They spin up a concept and sell it.
And a big thing, in the income statement of the franchisor, you can see generally line item how they're making money, whether it's through kickbacks on the supply chain side, franchise fees, basically selling franchises, or what we like to see at Vetted Biz, royalties, where they have that nice line item of royalties, and they're going to grow that as they have franchisees that are opening up multiple locations, increasing sales. Yeah,
it's important if during your due diligence process, you got to loop in somebody that knows a little more than you, like an accountant or an attorney. I've heard a lot of stories where this sort of information is clear there, but nobody picked up on it.
Well, it's you're a first time investor, first time buyer of a franchise, but an attorney that's reviewed 1,000 FDDs or an accountant that's gone through hundreds of franchises, what seems obvious now as like a Monday quarterback, in hindsight wasn't obvious at all, I'm sure.
Yeah. Well, these things are slippery.
And on the franchise attorney side, did you have counsel or did you work with like a corporate attorney reviewing documents?
For the purchase process?
Yeah, the purchase process.
No, I used an accountant for the acquisition. And it was an accountant in the dental industry.
Huh. Okay.
Yeah.
And then how did it, because this is mind blowing that a franchisor would seek like 18 years or basically the full term of royalties, talking to presidents of franchise brands, owners of franchise brands. Usually they want an amicable split where they'll keep that franchise fee and any royalties that have already been paid, but they basically go their separate ways, or they even take over the location. In my experience, usually the franchisor and franchisee go separate ways, and the franchisor might buy out the franchisee, and kind of that's it. They're not litigating to get hundreds of thousands of dollars.
It's a good question I have too. I was sued for breach of contract for 18 years of royalties for closing my shop. But I was also sued when I presented to them the disclosure document that had the true description of the gentleman they had in the van during Discovery Day. And so I got sued as a result, and obviously we went through the litigation process. During deposition, though, the CEO, David Lopez, the guy from the last video, when he was questioned why they sued me, he said, because of the statement Brandon was making. He didn't mention the contract. And so to me, looks like retaliation to me, and it's all public.
Just ask a factual question. After you got the demand letter from my office, Dental Fix turned around and sued Mr. Moore, correct?
Correct.
Okay. And did not make an attempt to reach out and discuss settlement, correct?
I'm not sure what my attorney did or did not do with you, but the reason that we filed the lawsuit was because of Brandon Moore's actions, the statement he was saying to everybody. We had franchise owners calling us every day, telling us stories of what Brandon Moore was trying to do with you.
So, and I have that on video as well. And it just shows to you the state of the system, where they would rather keep a lid on the fraud, knowing that it would tank their system, when that's what happened anyways. And yet they're still seeking these legal fees from me.
Well, also you see, and I want to map out better under Vetted Biz, like the trail of executives, because these bad actors, they bounce around to another franchise system where if it's like a publicly traded company and you have some issue against you, you can't serve on the board of another publicly traded company. Like the SEC is not going to allow you to keep being a public officer, where for franchising, these guys just bounce around, and it's like, there's no shame in selling 300 locations and 10 or 20 of them actually opened up and did well.
Well, I don't know if you're aware, it's funny you mentioned that. So the group of people involved with this, okay, they started working with the attorneys that came after me, but a lot of these people came from Quiznos. You know, one of the director of sales for DentalFix, or franchise development, whatever title he wants to give himself, Scott Mortier, he was actually named in the massive Quiznos lawsuit, the one that resulted in like a $200 and some million lawsuit. He was one of the original.
They had to go bankrupt, Quiznos. They went 4,500 locations down to like 220.
Oh yeah, and it's because of similar stuff, man.
Wow. And
so this guy was actually named personally on that big federal lawsuit. They dropped it when I think they settled and they took all the individuals off. And he was also involved with the same franchisor, David Lopez, for another venture back in 2008 that was the recipient of a Virginia regulatory order as well. So, and part of the DentalFix issue is that they omitted that from their disclosure document. So in that case, the rules were kind of flouted. It's like, we do have systems in place to inform the prospects when that scenario occurs, but in this case, they avoided it. And that's something that both Virginia and Washington State called out. But on top of that, going back to it, you have the chief operating officer. He came from Quiznos as well. He was named in a lawsuit for the similar stuff, you know. And there's other people, and it goes way back to the beginning of DentalFix, which was around 2010, which I think was when Quiznos split. When was that?
Quiznos went bankrupt right after the 2008, 2009. I mean, they were just
so
going like crazy, but taking too much from the franchisees, and the system started imploding.
Yeah, so these people just went from Quiznos to DentalFix.
Wow. And they should, I mean, yeah, the FDD, there's a wealth of information, and we've mined like maybe 5,000 FDDs of 2,000 franchises, and there's great stuff there. You know, if there's been prior litigation, prior bankruptcies, profiles in the executives, but at the end of the day, if they don't share the proper information in the FDD, then, you know, the best franchise attorney or the investor, unless they're doing public searches, like they're not going to pick up on some of that information.
Well, here's the thing that haunts me. Okay. And this is all of this DentalFix stuff we were able to pull off because the state of California hosts the federal disclosure document repository for everything that's been submitted, and it's historical. So there's a couple states that have FDDs on their website, but California is the only one that goes back in time. And back when this started, they had the 2009 FDD for DentalFix posted there, and that's where they broke out the guy in the van during Discovery Day. That's when they listed his true experience. And I think item 2 or whatever, when they described the principles, okay? And he was like the vice president of technical something, you know, he knew what he was doing. And that's where we had his resume saying he was working in the industry going back to 1992.
So before coming to DentalFix, my occupation was working as a trainer in a restoration company installing hard surface flooring. I did that for approximately 4 years and was just tired of the day-to-day laborious tasks. I think the DentalFix franchise model is fantastic, and I've referred several of my friends to the business. I've been a franchisee for 3 years, and I have approximately 178 customers. One thing with DentalFix is it makes it very easy when you know who your customers are, and with the help of Dental Fix, between the direct mail and the call center, makes it very easy to get customers for me. I like the ongoing support. I feel that it's added a lot of revenue to my business with the webinars that they do and the video library that they have. I can watch it at my leisure, and it's really helped me.
So here's the deal. So I found that, and obviously attorneys, litigation, regulatory orders come out about that. But California has an issue with their system. They said it's hosted on SharePoint or something. You can't access that FDD anymore. Had I not looked for that FDD right when I did, I may have missed it, and I would be another bankrupt guy.
That's
well,
wild.
I mean, I'm probably looking to do that anyway.
For the California system, and there's a few others like Wisconsin, Minnesota, I believe, that you can download FDDs. And at Vetted Biz, we're going through all the FDDs, so it's easy for people just in one spot have access to all the documents, and to have those for many years to come.
Yes, and the historical aspect is the important part because it keeps the franchisors honest year over year.
Yeah, and we've talked about in the past, I'd say 5% of franchisors, there are variances in the numbers from year to year.
Yeah.
Where all of a sudden, it went from 5 closures in 2019, and now in the latest FDD, there's only 2 closures. And it's like, well, what happened to those other 3 that were closures? They just kind of evaporated away.
I mean, you would think that would be a clear thing to get regulators to look at. Maybe they'll start doing that. I don't know, but it is kind of obvious. It's like, how can you end one year with one number and start the same year or the next year, like the next day with a different one?
And yeah, it's nuts. I mean, what got you to be like an advocate? Because I imagine most people in your situation would just be like, I'm done with this. I want to go my separate way. I want my life back. And I imagine it's a little bit like an open wound that like you're putting yourself out there, and you're helping a lot of other people that are in a similar situation or much worse, with a bunch of kids to put through college. Yeah.
So that's a great question. Thanks for asking. So when I started this, it was more like, hey, I found a smoking gun. They're suing me. I mean, and they just sued me. No questions asked, no discussion, even though that was in the FDD.
No demand letter. No, they didn't have like a initial phone call.
Well, no, I sent a demand letter saying like, basically, we found the fraud, just give me some money back. I'll sign something and go away forever. Right. And then they responded by serving me a week later. Right.
Wow.
And so, I mean, and that after they served me, at that point, I hadn't shared too much what I'd found, but after they served me, it was more like, no, we have to start teaming up, because there was obviously more people crashing out at the same time. And so what happened was, I kind of became the guy that had to do the legwork because I was the one getting sued and I found the smoking gun. So I've had a target on my back, right? And so it started when making the phone calls, trying to get people involved, organizing the franchise community. I spoke to 80, 90 franchisees total,
wow.
And I heard their story, and just about everybody had something that they had been misrepresented to in terms of, this was obviously something they had been thinking about, right? And so just hearing that and just kind of seeing, okay, clearly this wasn't just me, clearly this was a hustle, I saw the whole story, soup to nuts, so to speak. And it's kind of powerful, because then there's people that they start kind of getting involved as well. I mean, this thing spread where people I didn't even know who they were, other franchisees, they were calling the attorneys to join up. They were asking questions, things like that. I mean, it turned into a powerful thing. And then when the Virginia regulatory order came out back in 2019, so that was after 2 years of pushing, and that was the first like real progress we had towards this. That's when it kind of became real for a lot of people, like, oh, okay, this really isn't normal. This isn't how it's supposed to be. And that it just kind of snowballed from there.
Well, I imagine there's also some people that like kind of put their heads down and just stay down after the 2-year mark. And sadly, I've met franchisees that it's been 3-4 years, they're not making much money. And the spouse is the breadwinner and they're working 30, 40, 50 hours a week and they're not making much money from it. We've seen it because there's people selling franchises on Vetted Biz and you go through the numbers and it just doesn't look good. So I imagine a few of those were like, wow, Brandon, you're right. Like I did not sign up for this. Like I signed up to make money and provide for my family. Thanks for the wake up call.
I mean, it's one of those things, and it's like, I don't know what to do about that, because on the one hand, you have a franchise system that needs to protect its brand and feels entitled to royalties, which I'm not going to argue, because obviously there is merit to that, in a proper relationship. But at the same time, when the cost of exit for somebody is, basically going to the financial executioner, it's tough. So yeah, you're right. A lot of people do just kind of put their head down and pray, hope for something to change.
And after all this with franchising, like, do you see the merit in franchising? Like, are there good franchises out there that you would invest in, or had you have started again, you would really consider?
Absolutely, I'd still buy a franchise, especially going through all of this and like definitely understanding things. But my thing is, I would probably avoid an emerging brand, just from a low risk point of view. Like if there's a personal guarantee involved, it needs to be as low risk as possible.
Yes.
Okay.
And emerging brands, I see it like, if you can't get like your early customers to sign up as franchisees and like friends and family and like your immediate network, like why should the first franchisee be a total stranger like across the United States? It's going to be hard to service.
Yeah,
So,
exactly. I mean, and but more importantly is the franchisors that do that. Like I have questions. If you definitely got to look at the origins of the franchise. Like what is their story? Is it an organic business development that has pivoted to franchising because of how successful it was? Or is it something that was, brainstormed on a whiteboard as a possible brand that could work?
Yeah, exactly. Yeah. Do they have corporate locations that have made money? And sometimes it's just, you almost have to expand, or it's more profitable for everyone to expand as franchises. Like Chick-fil-A, for example, they want the owner to really have skin in the game and they split the profits. Other ones like Domino's, where employees become franchisees, and they'd have to pay so much money for that manager to run a Domino's at the profit level that they're making, that it's just better for everyone that there is a franchisor relationship. And, it just makes more sense. There's going to be more money collectively for everyone. So I think really making it clear that, okay, if you're not expanding through corporate stores, like many big brands, even in the franchise space, like Panda Express, Mod Pizza, even Starbucks as licensed stores, it's mostly corporate locations, and that makes more sense for them, their growth strategy. It really needs to make sense why a business chooses to go franchising rather than just growing corporately and having total controls over the system.
Yeah, that is an interesting point you bring up. When both strategies are viable, why would you go for one or the other?
And then, if you're, I've seen this sometimes, if the franchisor is looking for relatively low capital to expand their business, there's no better option than the SBA if you want cheap capital. But if it's a risky venture, then you got to be careful because of the personal guarantee. But SBA loan, if someone wants to grow at corporate locations, it's like 5% financing right now. So if they don't want to sign an SBA loan themselves to open up more locations, how could they put that on the franchisee to sign an SBA loan and put a personal guarantee?
Yeah, it kind of turns the loan into a hot potato in that scenario. Who wants to hold it?
Exactly. If they don't have the confidence to build out at least 3, 4, 5 corporate locations, and if they need the capital to take on some SBA financing, how can they think that someone else is going to be doing that and sleep well at night?
Well, and I mean, I think that comes down to how is the franchise portrayed. The sales process, whether or not that point gets brought up, that's an interesting point. I would be curious if a franchise broker would highlight that point to a prospect, or whatever. I think it's just a matter of how's the franchise pitched, which, thankfully there's organizations like yourself which provide transparency towards these sorts of things, because I don't think everybody does.
No, definitely. And we disclose on the first page of every franchise listings, openings and closures.
Mm-hmm.
And then in the metrics tab, it's the franchise for sale rate. So basically the churn in the system.
Yeah.
And there's some that are just like Subway, 17% of franchisees are exiting, and they're selling to the franchisor, selling to new people. And that's a high number. Every 3 years, 17%.
That's a turnover. Yeah, that's serious.
And then also the franchise failure rate, where it's how many locations are shutting down, what percentage of the total system.
Mm-hmm.
For Subway, that was like 21% over the last 3 years, with 1,500, 2,000 franchises closing down. I just highlight Subway because it's a well-known brand. People associate with success and a sure path. But
they're a high volume franchise, SBA franchise loan brand as well. So they come up frequently.
Interesting. So let's dive actually in. This is a good segue. Like, let's go on to the SBA data. Like,
yeah,
I don't think there's many people that you're probably the top 1% plus, and the SBA data better than most banks that are assessing risk and lending to small business owners and franchisees. Maybe that's another career for you, chief risk officer of a bank.
I mean, I'm good at highlighting risk. You can say that. I definitely have developed a knack for it over the past couple of years. That's for sure.
We'll definitely include a link to your prior YouTube video where you go through some of the key findings of basically the worst performing SBA loans to franchises. But it'd be good if you could just give a highlight and how you went about finding that data and digging through what the worst franchises are.
So back when the whole litigation and, franchise group organizing started, we were looking for any sort of information regarding any sort of, closures, openings, sales, things like that, because it's how we were kind of corroborating what they were putting in the media versus what actually happened on paper, right? And so one of the resources that I found was that the SBA puts out this list of all of the data that about all of the franchise loans. Now, for those of you familiar with the Coleman report, this is the same data that Bob Coleman sells. The SBA just gives it away for free on their website. So I got into the habit.
How did the data come about? Like there was someone that did a Freedom of Information request?
Yeah, I think it started as a Freedom of Information Act request, but then maybe they just requested it every quarter so they could, I don't know, maybe resell. And then the SBA said, you know what, we'll just put it on our website.
That's great.
Yes. So I got into the habit of downloading that every quarter, and I was able to not only, so my background, it's IT.
So you have a background in database management. So you're going through an Excel document with how many fields in this?
Yeah. So I have a background in, data sets and whatnot. Like I spoke to you earlier, when I was working the finance department for the MRAP program. That's where I developed the skills to just do aggregate data. So I'm very comfortable with the 600 and some thousand line spreadsheet that the SBA puts out. It's a beast for Excel, but I take it and I throw it into a database and I can do whatever I want, in terms of querying, developing reports and things like that. And so I have some interesting ones that you guys haven't even seen yet, but I became very familiar with not only the data, but how the data was changing over the past couple of years. And that's the important part because it tells you what the industry is doing.
What were some of the key findings in terms of just like the change year over year, quarter over quarter, going through these loans that have been paid in full or defaulted?
So there's been a huge growth in the 150,000 and under SBA loan product market over the past.
That's the SBA Express loan?
Yeah, they call it the Express loan, but that's not technically the SBA Express loan. In fact, the IFA, they just did a nice webinar with the guy who underwrites the bulk of those loans. So they explain the differences in the loan structures. But no, it's a traditional SBA 7A loan. It rates at 85% guarantee to the bank. It's a 10-year loan. It has a rate of, prime plus a couple percentage points. But most interestingly, even though it's tied to franchising, but it's also in that sweet spot for the SBA secondary market resale. So it's commanding the higher premium when they turn around and flip it.
So a bank can underwrite a loan to some franchisee, and then in 2 months they get it off their balance sheet and they sell that in the secondary market.
Yep. And if it defaults, well, it's the other person's mess to clean up and they're removed from the situation.
Wow, it's nuts.
Mm-hmm.
And is it just also the level of oversight when it's a lesser loan? Like the SBA gives more freedom, right, to the banks to kind of underwrite what they want?
Yeah. So the specific, what you're talking about here is the method of underwriting. And there's a couple programs you can submit underwriting to. The explosion in loans over the past couple of years with franchising, the 150,000 and under 7A loans, that's under the underwriting program known as preferred lending program, which the SBA states that the lender has demonstrated enough proficiency in the underwriting guidelines that they can handle the whole loan. They can underwrite it, they can disperse it, they can service it. The SBA doesn't even see that paperwork until after it's defaulted.
So if they get this off their balance sheet in 3 months, if there's a less sophisticated buyer on the other end, they're happy. They're getting their 2%, 3%, whatever fee of the total loan amount, and they can just be issuing these loans all day.
Yeah, it's and when you look at it in conjunction with how the safety of the SBA loan program is used as kind of an advertisement for, this is how vetted this franchise is. Even the SBA gives money. Buyer beware.
Yeah, it really doesn't mean much being on the SBA franchise directory. And SBA says that very clearly. They're not vetting the opportunity. It's just looking at the franchise agreement and making sure that it is eligible and meets the requirements of the 7A loan, but they don't endorse the business model or the financials.
With those lower defaults, it does tell you that they're doing something right. Now, it might be the bank, they're underwriting or setting expectations for what happens in case of a default differently, which could be part of it. But the other thing too is they're definitely not being charged off at excessive rates, which is always a good sign.
Yes. And just because someone pays in full does not mean the business is successful, right?
No, in fact, I know plenty of people in the Dental Fix franchise that even though their loan is paid in full, they are still paying for it because they had to either remortgage their house and take out equity for that, or they had to, take out a loan against their 401k or even take an early distribution just to cover it. I mean, the reality
is they could be
is
out of pocket 100, 200K, it's paid in full. And, if you don't know the full story, that doesn't mean that investor had success with that franchise just because he paid the loan off in full.
Yeah. And it goes back to proper vetting. You got to look at those, the default rates in conjunction with what does the FDD say? Does that jive? And I mean, you can even go down to the level of, look, the SBA, they list what business failed or what loan failed. They list the business, the city, the state. You can corroborate that with who got terminated in the FDD and see, did this paid in full loan, do they still exist? That's one way to verify. And that could be part of the due diligence process.
I like that. Brennan, correct me if I'm wrong, but a franchisee that leaves a system, most of the time they're signing an agreement that they can't just talk openly about how their experience was with that set franchise.
Yeah, you're absolutely right. Boilerplate termination agreements will cover language use, non-disparagement agreements. Even the Virginia state order of rescission from Dental Fix was a boilerplate termination letter that included provisions limiting speech. So, I did not take that because it was a limited order and we thought the litigation would be successful. In hindsight, well, oops. But what are you going to do? But, that is something that I would be looking to address with Virginia state regulators or legislators going forward is what can we do to make sure that, speech doesn't get limited going forward.
And it's kind of like, if you're putting yourself in the public space that you are getting outside investors and you're selling licenses, you gotta go all in. You can't just say, okay, everyone can open up my brand, but then if something goes wrong, I have all the power. It's like someone buying a publicly traded company where they have tons of fiduciary responsibilities. If you're an investor in a publicly traded company, you can talk about whatever you want. And it's like freedom of speech. It's pretty basic, and that helps all the other prospective investors and current investors if there's that free flow of information. And I guess if franchisors are really concerned with proprietary information and systems, just don't do franchising. Grow your own business through corporate locations.
Yeah, you raise a good point. You know, the franchises that can be more vocal and whatnot, those are probably going to be your better bets, the ones that are more transparent. I mean, if you look at big systems like, you know, the Taco Bells and McDonald's, people know what they're getting into. Like it's they know, but it's the smaller system. And then it goes back to the emerging brands where that tight control of information might be vital to the success of the brand long term, you know. And
how do you define emerging brand for those that are new in the franchising space?
I think it varies. I don't know if there's a hard description, but what I would say if it's, you know, 5-10 years old, if it has less than a couple hundred units, you know, if there's, you know, if the SBA has had a couple loans that haven't matured yet, you know, just somebody that you haven't seen somebody, or there hasn't been a lot of people who have bought in, developed, and exited, you know.
I like that metric. Have there been franchisees that have owned multiple locations and profited from their business investment?
Exactly. And I mean, if you look at the franchising path of, you know, what this is about, the bigger boys, the ones that have been doing this forever, they have multiple units of multiple brands, you know. Yes. And it all starts with, it's got to start somewhere. Develop a brand, sell it, maybe buy 2 more.
Exactly. Roll it up. I mean, you see that as you grow, that the EBITDA, the multiple on the profits really does go up. And that is kind of the beauty of franchising, where depending on the right brand, you have predictable time to open, break even, and hit proper income. And you're not as afraid to get SBA financing or other financing mechanisms because you have that predictability.
Exactly.
But, you know, emerging brands oftentimes don't have that predictability, as we saw in this case with dental fix.
Yeah.
Any other key findings or insights on the SBA loan data piece?
The SBA loan data piece, I think the big part is, you know, that $150K and less SBA 7A loan. You know, I think that overall the SBA lending program is pretty solid. I think that there is a culture problem amongst a particular group of people who facilitate loans. But I also think that is going to be addressed here shortly.
Great.
So, you know, I think that as long as you stick to working with a local bank, you know, you're not approaching brokers, things like that. You're not having people help you with your projections. You know, you're making sure that you're sourcing that from accurate data that's documented. And if it is documented, but it's not in the FDD, well, then you might want to talk to a regulator. But, you know, just make sure your ducks are in the row when it comes to that stuff.
Any advice for franchisors like that are in a difficult situation with a franchisee, how they can basically mend the relationship and not go into litigation and have everything turmoil? Because I imagine most franchisors do not want to be in litigation. They don't want to disclose that in their FDD, and they just don't want to have something pending, and they want to focus on growing their business and franchisee and growing their unit count.
Well, I mean, we can take a look at this example. So I approached them with a significant issue in 2017. Some could argue that they did not do the right thing at that time with that franchisee and instead pursued litigation. And now it's, you know, 4.5 years later. And keep in mind too, 9 months prior to filing litigation, they had just successfully closed a 20% equity sale. So they went from being valuated at $31 million 9 months before litigation with me to they have less than 50 franchises left. They're no longer franchising, and they're actively trying to sign franchisees out.
Wow.
So that is what happens when you don't do the right thing.
And having, basically taking feedback from franchisees like yourself and others that, you know, they're on the front lines, they're servicing clients. And I see many of the most successful franchisor brands, they're constantly getting feedback from franchisees in the system and then going through the data and then rolling out changes to the product and model.
And that was a big issue that we faced with this franchisor. We were constantly providing feedback. They were constantly taking it in, but there was just never any action taken. And so, you know, a lot of what would happen is long term you get resentment build up. So your 2-year sweat equity exit looks more like a rage quit for most people. It's very frustrating, and if you let that stuff grow, I mean, eventually somebody's going to catch a hold of it, and if it harms the franchisee's business, I think that there's going to be accountability going forward.
That's well said. So, I mean, I think there's a lot of lessons learned for people that are prospective franchisees. Maybe you're an accomplished franchisee and you're looking to get into emerging concept. I have seen that franchisees that have many locations of an established brand, and they're looking for that next hot concept. Working with your community bank, working with that local bank, having them be an advisor to vet the business together with you, working with a franchise attorney, I imagine, in the very beginning, helping you negotiate the agreements of the term. Any other major takeaways that you'd like to end our discussion with today?
No, I would say the one big thing, especially with emerging brands, when you're going through the negotiation process, to the extent possible, I would avoid a personal guarantee. And if the franchisor absolutely requires it for you to become a franchisee, you need to have that discussion about what happens with, the people that'll be impacted. So, and that includes your family. You're going to need to say, this is worst case. During my sales process, they said, if you go to get out, it's only $10,000, as an exit fee, and sign some paperwork. Instead they, tried to sue me for over $1 million.
Yeah, it's wild. Well, Brendan, it was great to have you on, hear the experience. And it's really good and I love that you put yourself out there, because everyone hears about the glamour of franchising and people are making tons of money and being their own boss. You hear that a lot. But there's times where it works out well, and there's many times it does not work out well. And from what I saw from the SBA loan data is franchises fail at the same rate as independent businesses. Yeah,
they do. And that's my whole thing. Everybody says, oh, Brandon, he has a problem with franchising. No, I don't have a problem with franchising. I have a problem with a franchisor. Okay. I was just saying, I don't think that there's a fundamental issue with franchising. I would still buy a franchise. Like, there are certain brands that I would buy tomorrow.
I'm doing amazing. You get your money back super fast, and there's
and
many franchisees will validate that.
Yeah, I get it. You can't let bad actors hold you back. I mean, obviously it's been a roadblock, but this isn't indicative of the whole industry, but please learn from the lessons that we have, learned ourselves.
And any advice for maybe politicians, members of Congress that might be listening to this, folks from the FTC?
The biggest issue, I think, is that there is a lack of accountability towards the franchisees. And what I mean by that is it's difficult for franchisees to hold franchisors accountable in almost any scenario. My case is a great example where there's, multiple states have found fraudulent activity, and yet you cannot prevail in a civil court. And I think that's starting to become to be addressed, but we really need to build that pattern of accountability coming from the franchisors. What happens in these scenarios? And I think once that gets restored, then you can't really complain about franchising. It's back to being a solid industry, well regulated.
Yeah, it seems like flushing out those bad actors and making sure that they don't repeat it, and hitting it fast. Where the Burgerim owner sold hundreds of locations. I don't think he's in the U.S. He's been gone for a while.
No, he flat. Okay, so this is a nugget of information that's interesting. So DentalFix from in 2016 for about 9 months, we had a guy named Tom Marion working there as he was like a, I don't know, C-level, but whatever. He was trying to make things better and didn't go too well. And I had an employee down there at time during doing the training, and he told me about this guy. So this guy leaves DentalFix and goes right to Burgerim.
And for those that don't know, I mean, Burgerim's probably the biggest franchise fraud, at least in the last couple of decades, where they.
So, I mean, I think it's just bad luck. I met the guy. I mean, I don't see any issues there, but it's like, oh man.
Yeah. So Brendan, I mean, I really enjoyed the conversation today. I appreciate you being so open and transparent. I'm sure a lot of these things, it's not pleasant to talk about, but the impact that you've already have and will continue to have on the larger franchising community should be lauded. And I mean, it's amazing what you're doing, and that you're fighting for all those smaller franchisees that have been taken advantage of.
Yes, thank you. You're right. It hasn't been easy. It's been a big issue, in my life, but it's coming to an end. And, I think this time the little guy might actually win.
Exactly. Well, we're all rooting for you. And again, Brandon, thanks so much for being on today.
Thanks. You too.
Cool.